Ladies and gentlemen, welcome to the sixth episode of Investing with the Boys. You got myself, Stock Savvy Shy. We got Sam. We got Logical. We got a lot to unpack this week. We had a boatload of earnings reports from the mid cap and small cap growth. We're going to go over did Celsius take a Celsius? They're up 35% after the market. Mercado Libre, the king of Latin America, hit a new all-time high. But the other Latin America, New Bank, doesn't look so good. We got China stocks continuing their momentum. And the new Fintwit darling Grab had the spotlight in the sun for a couple of days. It doesn't look like it's going to be there for too much longer. Anyway. But first, before we want to begin, I want to shout out our sponsor, Osprey Funds, for sponsoring our show. You can check them out at ospreyfunds.io. But Sam, I'm going to pass to you for the macro and the larger picture of what has happened this week. Because to be honest, I am so all in the earnings season right now. I have no idea what happened in the macro front.
Yeah, I mean, I gotta be honest, in the macro front, nothing's really happened as far as rates just keep coming down. I'm sure Logical knows what that. I'm sure Logical's been looking at that too. Had a little bit of a scare yesterday. Of course, today obviously had a little bit of scare. But as far as the macro front, nothing really. I don't think the markets really pay attention to it. FOMC minutes came out yesterday. It appears that the Fed is looking to end its QT soon, and it's, I would say, quote unquote QT, because of the fact that they're technically letting mature bonds roll off the balance sheet versus just actually selling it on the open market. So in this case, I guess it is technically QT, but they're planning on ending that soon. They already cut it in half about last year, actually. And once they end that, usually on a historical basis, whatever you cut QT, you pretty much roll into QE shortly after. You know, in this case, maybe not shortly after, but historically, when you end QT, you go into QE at some point. So I believe that's perceived as bullish in the market. I think that we are in a rate cut cycle. We still are. The Fed is not going to pivot and go and hike rates. That I don't think that's what they're going to do. I think they lose a lot of credibility if that's what they're going to do. So, just honestly, business as usual. Initial jobless claims came up this morning, and I don't think the market cared. It was up, but it wasn't up a lot. So that's good enough for the market. And rates were somewhat down, but I think there's been a little bit of volatility lately, mostly because Trump did say that he's going to be decreasing the Pentagon budget by 8% annually for the next 5 years. We had many defensive AI names drop. Yours truly, Palantir, dropped probably about 15% from its all-time highs recently. But then again, I always say, when in doubt, zoom out. Palantir is up like 1,000,000,000% year to date. So it's a little blip in the year-to-date chart, not a big deal, right? It's like the long-term thesis still rolls on. And honestly, I think a lot of people are kind of spinning the story around thinking that, hey, if they're going to be cutting the budget $8 billion per year, that means that, 8% per year, that means that they're going to be putting money toward software or components that will actually benefit in saving money for the government. So they're going to, it's like, I guess people spin around the narratives, whatever. But the fact of the matter is, dude, that RSI was hot and Palantir is up 1,000,000,000% year to date. If it's down 50%, it's all-time highs. It's not really a big deal, but people got to take profits at some point, right?
I mean, I think let me touch on that Palantir point, because I think the market was looking for a reason to sell off Palantir, and I think they got one on that 8% Pentagon cuts. But I think it was absolutely misguided. I think, like you said, the RSI, the daily and weekly chart, was fuego, and it kind of needed somewhat of a pullback. But this headline maybe was the one that pushed it, but it really was misguided, because I think if there is going to be a Pentagon cut of 8% over the next 5 years, it's not going to be a death blow to the total defense spend. I think the defense spending in the next decade, even longer, it's not changing, it's evolving. It's not going to be like that. The money is not going to it's going to start reallocating away from the legacy contractors, like the outdated systems, like the fighter jets and missiles, and it's going to kind of rotate towards the next generation technology that prioritizes AI driven warfare, cyber defense, autonomous decision making. This is what the new age of defense is going to be. Does that sound familiar? All those traits, what stock does essentially all of that? Palantir. So when you hear the headline that 8% of the Pentagon budget's going to get cut, that's going to hit the legacy contractors and those legacy defense players. It's not going to hit a Palantir. And honestly, like it's probably going to be even more impactful or more of a tailwind for Palantir because Trump-led presidency cutting Pentagon spend, defense spend, that's a wild thing to see. And it illustrates the efficiency that the Doge program's having or what the government spending is going to be hyper efficient. That's their new tone that they're going to have. That's what Palantir's operating system essentially does. It optimizes efficiency. So like I believe it's actually going to be a net tailwind. And the market was just looking for a reason to sell the stock off, and it got one. And it was aggressive. Like you said, 15%. I think it was a 30% pullback at one point. I think it hit 95.
Yeah, it was pretty low. Yeah.
So like, did I buy on that dip? No way. Like I had no reason to. Like I got overweight under $10. It's still my top position, even though I've trimmed half my total shares in it. It's still 12% of my portfolio. I don't feel the urgency to add to a name, but a lot of people like are reaching out to me. Like, is this the time to get in? Is this time to get in? I can't answer that for a lot of people because it's a different risk profile at $100 than it was at $10. And a lot of people called buying Palantir under $10 the dumb money era. That's not the dumb money era. Clearly, hindsight's 2020. Hindsight's helping me out with that, but retail isn't driving the stock price after $60 or $70. Like insiders aren't driving it either. They had zero purchases in 2024. It's purely institutions accumulating the stock because they were caught completely off guard with Palantir's presence in the future digital economy, the post-agentic AI world. Similar fashion, they were off sides with NVIDIA a couple years ago. It's the same thing in Palantir. And now they're paying a premium that the retail audience didn't have to. And that's what's really driving the stock up. So when there is a pullback in this Palantir at $100 from like 125, I do think it's going to get somewhat scooped up because institutions are accumulating their stock because they need that AI exposure. In order to have an AI bucket, you need a Palantir. You just have to have a Palantir. It's like 15 years ago or 10 or 15 years ago, you want that cloud exposure, but you don't buy Microsoft, Google, or Amazon. And you're saying you're a cloud investor decades later and you don't own any of those names ever. You look like a schmuck. It's the same thing for AI. But I'm going to, Logical. What do you think about this pullback in Palantir? I know valuation is like still absolutely insane. It's trading at 150 times free cash flow at $106. Like that's still wild to me, even after that pullback.
Yeah, I mean, I think that buying the dip is going to work until it stops working. It sounds like a stupid statement, but it's the truth. So for now, like if you're looking at this as a trade, I think there's a saying. I follow this guy on Twitter. He's a really smart trader, and he always says, you always buy the first pullback after a new all-time high. So that typically ends up working out. So chances are it's probably going to go higher from here. Then the question at some point is you can keep repeating that process as long as you continue to make new all-time highs. But the second that some of these growth stocks end up putting in a lower high, that is like a big warning signal in my view. So that's when I would be starting to think like, okay, party over or something like that. So for now, I think that it's probably a buy. No, I'm not buying it. I'm not saying that. I'm just saying that it's not like the end of the party. I don't think so. Not yet. You would need confirmation that there's like an end of a party here. So I feel that a lot of people are still going to keep buying these dips because they're working. And so until they stop working. So yeah, I mean, I think it's definitely detached from fundamentals. I think that's been the case for a long time. Obviously, they continue to accelerate on the top line, the bottom line, expanding margins. But it's not like I really don't think that you can put this on the same place as an NVIDIA, where we saw, that one quarter where they beat the guide by like 50% or something like it was like the guide was supposed to be like 6 billion, came in at like 11 billion. Then all of a sudden their margins were like way higher. So that means that the earnings were way higher. And all of a sudden the stock's like earnings went down. Like we're talking about like huge, massive beats, not like 2-4% above expectations. Like we were talking about 50% above expectations. I don't think you have that with a Palantir because the stock's not, it is maybe getting a little cheaper, but it's not getting a lot cheaper as it runs up. So I don't think that it's an Nvidia-like situation back in 2023. It's a leading stock though. It continues to win as long as the market stays intact, US equities stay intact. I expect it to continue to being a leader. I mean, there's no reason for this stock to roll over, and people are probably looking to it right now, as well as like a few other growth stocks that have been doing really well, as you know, places where are, it's kind of weird, but safe havens. People are like looking for growth wherever they can find it. It used to be Amazon and Google. Well, I don't know about Google. That kind of hasn't been relevant for a while, but it used to be Nvidia. It used to be Amazon. It used to be Meta. I mean, Meta's still kind of holding on to that crown. But I think people are looking past that because they feel that the upside really isn't there anymore. So they get a little bit more juice out of some of these quote unquote smaller companies. Obviously, Palantir, quite a large company now, but you look across the board today. I mean, let's talk just generally about the sell-off and growth today. You had him sell off, you had Rocket Lab sell off, you had AppLovin sell off, you had every stock basically that has been a winner sell off. So I think what was really interesting was to look at the ones that actually recovered a good portion of the sell-off intraday. And I think those were the ones that are probably going to continue to be winners because people are looking for any dip to buy. And I didn't pay attention to Palantir necessarily, but I believe like Hims was basically like almost fully recovered through the day. I mean, yeah, it was only down 3% by the end of the day, and it was down like, I don't know, 11% to start the day. So look, there's winner stocks. They're winners. And I like, people are like, oh, that's it. These stocks fell. Time to short them. It's like, no, you need confirmation that the party is over and it's actually weakening. Dip buys whenever it's like profit taking for people who have been riding these things for 1,000%. That's, you know, people are going to look at that as entries or reloads or whatever. So I think for the time being, you know, as long as nothing falls apart in the macro, which right now we're not seeing it. Obviously TLT staying with a decent bid. The problem with looking at like the yields and TLT specifically as signal in the market is there's two issues with that. Or I should say two scenarios, right? Is TLT going up because rates are coming down? Or is TLT going up because rates are coming way down because the economy is going to deteriorate? Those are the two scenarios. I think right now we're still looking at scenario one until we start to see real data come in that like unemployment is ticking way up. We're in a recession. That's going to have effects on the economy. We need to bring rates down 1%, emergency Fed rate cut tomorrow. Like we're not in that scenario. So for right now, a little bit of softness in the economy will actually be pretty bullish because that means that, hey, maybe inflation is actually going to be tame. I mean, think about it. We had hot PPI, hot CPI, and the market rallied and rates came down. That's not normal. It's basically the market saying, hey, we're no longer concerned about inflation. We're concerned about downside risks of the economy. So TLT coming down or TLT going up right now feels like a bullish situation where long duration assets are still going to continue to do well until they don't. And so I personally can't long a lot of these stocks because from a fundamental valuation perspective, I just don't see the value there. But they're probably going to keep doing fine as long as things hold up. So that's kind of where I'm at right now.
Well, I think I agree about I think the dollar is like what Sam always says. Like the U.S. dollar is really driving a lot of the narratives right now, and the key theme of this earnings cycle is clearly tariffs because that's causing a lot of the weak Q1 guides. No, like the high stake poker game that Trump's playing, nobody really knows how the reality of it or how impactful it's going to be. So they're being very conservative on their guide, and that's becoming an anchor on any kind of earnings beat that we've seen the cycle. This morning, Walmart had a really weak guide and really weak. I don't know if it was a print was really weak, the actual earnings, but it was a weak print in general, total, tariff related. We just got Global EU reported their earnings this week. Really bad guide, tariff related. A lot of big tech's weak guide was somewhat of an FX headwind, compute constraint maybe, but like it was purely FX headwinds. Like it's becoming a reality, and I do think like Walmart's a really, really great sign on how real tariff is because it's a massive conglomerate. It really is. And they had a really weak prim. But for today, like I remember at the open, I was streaming on the StockTwit stream. It bled quickly at the like it was just like all of a sudden within 2 minutes, the Qs went down 1%. And I was just like, what's happening? I couldn't see any news header that was like causing it. And I was like, could it be the Walmart earnings? There's just no way. And then where do my eyes go when I see just pure fear in the market? Because the Qs were down 1%, but every growth stock was down 6+%. Palantir was down 10% back-to-back days. You saw just across CrowdStrike was down 7% out of nowhere. CrowdStrike. It's just like it was just a crazy time for risk on trade.
CrowdStrike was down a lot.
Yeah, everyone was. So my eyes went towards Bitcoin. What's Bitcoin doing? Interesting, 98,000. That gave me somewhat of a safe haven that the risk on trade isn't deteriorating. Then I look at the VIX. The VIX was up only 2%. There wasn't that much fear in the market. So like I was just like, I think we're fine. I don't know what's causing this like rug pull, but the risk on barometer on the VIX and what's happening in Bitcoin is telling me it's all right, guys. So like I added today because of that. I truly did. I don't know. What'd you do, Sam, at the open text? Like it was bleeding a lot of the growth names.
So this morning I bought some stuff. Not a whole lot. Because I've been rolling my cash position lately into just some short-term trades. It's not really a lot. Like it's really the 20% of my portfolio. I would attribute most of the cash is from taking profits on trades that I've had recently. And actually bought a swing position in MongoDB. That thing was in the 270s this morning. It was like 278. So like the low 280s, I hit 2026 leap in it. These things are expensive, by the way. Like they are not cheap. MongoDB has high volatility, so the premium on these things is pretty crazy. Plus that it's earnings coming up. But all I need is just a little bit of a run up into the probably the low 300s, and then I'll probably take profit on that. But I do have a core position in MongoDB, not a huge one, just a small one. But besides that, I didn't really do anything this morning. I had my eye in certain companies that had their earnings yesterday that I thought was going to do good today, but apparently they didn't do today, like Toast. I know you're a big fan of that, Chai. I mean, I've been looking at Toast for a while, but I didn't do anything with Toast.
I'm a big fan if you had to tell me to pick a POS system. I am not a big fan of that whole theme.
Yeah. I mean, when it comes to Toast, I feel like they're probably the best value one out of. You mentioned before that when it comes to like Toast and TTD, even though they're not the same company, in terms of valuation, like Toast is probably the best one. Probably has more runway because TTD, we've talked about this on to lengths on TTD, but Toast is probably a fairly new player. They have a lot of runway. TTD is more the mature company. So, did I do anything today? Honestly, no, I didn't. I mean,
that's crazy though, like because like a lot of these growth stocks have pulled back 20% from
I think
that's how extended we are.
I think most of it attributed to the fact that like in my morning, I don't have time to look at stocks because my kids are awake and I get them ready for school. So it's like, hey, get yourself ready, preschooler, get yourself ready. All right, I gotta buy these stocks right now. Like, nah, I don't have that option. And honestly, I made most of my buys. Like most of the stuff that I own pulled back, yes, but I have averages way below where they are right now. So it's not really a big deal. The one thing I was kind of considering was GitLab. GitLab I was considering to add to this morning. It was like in the low 60s. I obviously missed that one. CrowdStrike in the low 400s is not a deal.
That's
like it was surprising. Yeah, it was surprising how low it got compared to where it was trading yesterday. But CrowdStrike in the 400s is still like above 20 times EV/NTM revenue. So it's
you didn't feel the need to add. You didn't feel a need to add to Grab after their earnings. They're down a lot.
Oh man,
no.
Grab. It's a long-term position, and I already built my position below the 4s, so it's not. I did add to it like above the 4s, but my core position is literally just built below the 4s, like around 380 or something. And I mean, I don't know. We can get into it if you want to, but when it comes to Grab, I mean, the hype that happened over last weekend, we're really back to where we were before the hype. I would actually argue we're above where the hype was. And the stock wasn't down as much as I thought it was going to be. Like, obviously it's down, it closed down to the lows of where it was pre-market. But it didn't close the lower days. So, I read the report and it wasn't that bad. It wasn't even bad in my opinion. I think that it's just business as usual. When it comes to Grab, like people's expectation came into pretty high. I mean, the thing was trading at 10, 12% above from here, more than that, maybe like 15% above from here. And I think they were trying to price in the earnings ahead of time. They're going to have a triple beat and they didn't. And people got disappointed. But if you looked under the hood, the earnings was just business as usual, and the management made commentary that was legit. Like, it's like when we were listening to Jeff Green on the call. He sounded like he was dodgy, trying not to answer the question, whose responsibility was, like saying he's taking accountability, but the corporate stuff, whatever. Like, we don't want to listen to a Grab call. I don't know if you ever listened to it, but like, they don't BS. Like, they're going to tell you what it is. They're focusing more on returning value to shareholders, and they're working on their profitability, and they're also going to work in growth, but not going to sacrifice profitability for that. And that's what they did. They kept profitability up there, probably not to the liking what people thought it was going to be adjusted EBITDA, but the growth was still in the mid-teens, and that's fine. And they actually guided for growth for fiscal year 2025 and growth in the high teens. It's like, what more do you want, dude? Like, do you want this thing to go up overnight and they want to have a rule of 81 and they want to have 35% growth like this? I've told everyone, this is not that company. And you know what? For everyone who follows me, or at least what I caught wind of, no one was buying weekly calls on Grab hoping it's going to go to $10 tomorrow. All right. And anyone who did, I'm sorry. But everyone who I follow on Twitter, who I think is reputable, did not say that was going to happen tomorrow. Right. So if people come with the expectation, especially when the market is trading at 25 times price to earnings, like, you better think twice, right? Especially when the macroeconomics are not supporting everything that you're expecting right now. So, for the more seasoned trader, they would look at the market today and be like, well, yeah, it's nice to nibble a little bit in the market, but like, this isn't like a shopping spree. This isn't August 5th. This is just a little bit of a scare right now, in my opinion.
No, I mean, I think what you nailed it on, like the perception of Grab. I think a lot of people felt that FOMO. Like, Logical myself, like felt somewhat of FOMO on Grab. Like, it caused me to dig deeper and do a deep dive in the stock. Like, that's how much FOMO it caused me. And then once I saw that this was more of a Camry, it's not a Tesla, on speed, on how much it's going from point A to point B, that metaphor is how much it's going to become a multi-bagger. It won't. Maybe it'll be a 2x in 3 to 5 years, which is fine, guys.
I know that's great.
That's
like,
fine.
That's amazing return, but in my opinion.
But people were expecting this to be the next
Yeah.
Palantir, Robinhood, Rocket Lab. It's not, like, structurally, like their actual, like the outstanding shares, it's not like that. It can't move as quickly, like, for that. It really can't. Operationally, I don't know. Their core industries, like the mobility, food delivery, and like financial service that they offer, like, they do face somewhat of margin pressures. Like, they have to, it's a slow grind on profitability improvements. Like, it's not going to make those transformative leaps that you want to see in a quick multi-bagger. Like, there's no obvious step change growth catalyst.
They're not part of an AI secular trend, right? They're not working in high double digits US commercial growth. They're not finding like massive growth year over year in terms of clients when it comes to their trading platform. Like, they're not at the beginning of a major cycle in terms of space launches with Rocket Lab and basically being the logistics of outer space. Like, they're not doing that, right? So when people look at this company, it's like, I don't know what you want from these people. Like, they're doing what they're doing and they're doing it great. And it takes time. Like, this isn't a US, they are traded on the NASDAQ. So it's not an ADR. So when you own Grab shares, you actually own Grab shares, not a proxy of Grab shares. And they're just going to keep doing what they're doing, right? Like, these guys are straight shooters, in my opinion. So when you buy something like that, you can't, and even if you look at the premiums, like, this isn't for option traders out there, like this is not a stock you wheel, right? This isn't a major volatility crypto miner where you're going to get like 200% IV on every single option that you trade collecting premium. Like this is not that company. So traders don't like it, right? So, and then fundamental people like it, but does the retail community like it? Maybe not anymore. And that's fine. That's fine, right?
Well, I think it's a lot like there's people just like to follow people blindly. And I think when there's certain individuals like they just like whatever they say they're going to follow without doing their DD. And I think a lot of people just heard that excitement and just like fantasized a bit. But like you said, like those mentions you called out, like all those industries, TLDR of that is essentially they are going to be, I don't know, they're going they're going Grab lacks the explosive growth and margin expansion that separates the market leaders and from the market disruptors. They're a formidable regional player. They're going to be just fine. They boast a strong regional competitive moats in Southeast Asia. Their operational efficiency is commendable, but they're not going to be they're not going to be a disruptor that's going to cause an asymmetric return potential. That's a multi-bagger. It's not.
Well,
They're not doing anything that's paradigm shifting. Yeah. What?
It's hard to identify those in 2025 after we had a massive bull run for 2 years. Like it's hard to if it was easy to identify those, everyone would be rich and it would be 2023 all over again, but it's not. It's
honestly, I think what's happening, a lot of it, and the reason why there's a big retail crowd on it, let's be real. It's a $5 stock. People love that. They want to see the $5 stock turn to a $100 stock, and they want to be rich.
That's true.
They miss Palantir at 7. They want to see Grab at 5. This is the next, retail banger. But that's just not how things work. You gotta. The problem is, and it's unfortunate, is that people do follow blindly, and a lot of people. You're starting to see retail participation really increase. In my view, those are big warning signs, because people are just buying things without understanding what they own. And like you were saying, Shai, there's a lot of shares outstanding because this is a $20 billion company. It is not a $1 billion company that you can move the way you think you can. It just because it's a $5, like you see this all the time with, small with small dollar size like people don't understand the difference between a share price and a market cap. And that's really the issue. When you talk to a lot of like early retail crowd, it's okay. We've all been there. We all had to read the book on what market cap is. We all had to read Peter Lynch or Howard Marks, and we had to learn that, you have to understand what a market cap means. It means it's the size of the business. The share price is completely arbitrary. But unfortunately, people who are, participating at this stage of the bull cycle, probably jumping in because, okay, sorry, there's one theory I have of why retail typically loses money in markets and why they swear off the stock market entirely. I've noticed this. I was probably one of them or something at some point. Like, the reason why you see higher retail participation is because your buddy made money in stocks and you think, oh man, I want to make money. You start feeling that FOMO. And so you jump in. But the thing is, your buddy already made money. So it's harder to make money because there are less opportunities by the time you arrived. So they think, and maybe they catch the tail end of when the opportunities are, they get their first win and they start getting that confidence that, because right now in a bull market, everything's working. HIM's up from $30 to $70 in 2 seconds. Like, I'm seeing posts where people are like, it's so early right now for HIMs. Dude, it's $70. It was $6. It was $3 in 2022. It's up like the 22 times. That was early. And like saying it's at $70, it's early. Like maybe 10, 20 years down the line, maybe it will be early. But you can't say that a stock that is up 22x in 3 years, now it's early. So the problem is people catch a win because everything is going up. So in a bull market, things go up. The later you are, and this is why I believe we're in the later stage of a bull market, and I see more and more signs every single week, is because later stage of bull market, so half of the gains of a bull market are typically made in the last 1/3. And that's just because everyone is piling in everyone is buying things, everything is going up. And so you catch a win because you're in this late cycle as a retail investor, you're early on. And what happens? You get confident. So you keep buying because it went up the first time. You buy again, it goes up a second time. Buy again, it goes up a third time. We are in a bull market, late stage of a bull market. Everything is going up. It's easy to make money. But what happens when it stops going up? And then you buy that dip. And so this is what we were talking about on the growth, like what happens with these growth holdings essentially when we get those pullbacks. I said to you earlier about Palantir, it's the first pullback after a new all-time high. That typically is a good pullback to buy because you have to see how that it will likely rally. But the question will be, one of these rallies are going to fail at some point, and then we potentially head towards an actual bear market. So the reason why I think that people actually end up doing well and they have good gains, but then they keep doubling down on this buy the dip thing. So the issue isn't that they're down on their investment, it's that they continuously average up on every single dip. So that's an issue, I think, is you keep putting more money into the trade and ultimately at some point it turns against you. But the thing is that you've already put in more and more money. Sorry, there's a little noise in my background, but what do you guys think in terms of people basically just buying things that continue to work? But I do think at some point they put in more money and then it stops working in their favor is basically what I was trying to say.
Well, I definitely want to provide some input on that. But before we continue, I just want to give a shout out to our sponsors. If you're into crypto and look for ways to add to your IRA or stock brokerage account, check out our partners at Osprey Funds. They offer easy access to crypto through traditional investment accounts, and there's no need for wallets and exchanges. There's Solana Trust, ticker symbol OSOL, and Binance Coin Trust, OBNB, let you get exposure to these assets right from your brokerage or even your IRA. This is just a heads up, guys. Go ahead and explore your options. Make sure you do your own research, but you can start by checking out their website at ospreyfunds.io. You can check out the prospectus there and more details as well. That's ospreyfunds.io. Not financial advice. Let's get back to the business. You asked me, honestly, dude, this has been happening for quite some time. Like I do remember, I remember specifically, all right, when everyone said this is just the beginning of Palantir, once it broke through that consolidation into the $30 range. I saw multiple hedge funds releasing research over and over again, specifically, well, actually, no, I'm sorry, I don't want to call them out, but like multiple hedge funds and analysis houses releasing research saying Palantir is going to be $100. Dan Ives kept on raising his price targets, whatever. I don't think we're any different there from in terms of, I don't want to say chasing Palantir, but in terms of like the chasing the price target scenario for a lot of analysts. But I do think that today compared to 2021 is quite a bit different. I don't think this is 2021 where people are just chasing valuation, chasing prices, no matter what, regardless of valuation. I think these are actually very profitable companies doing very well. Palantir is a rule of 81, right? Or 84. I forget what the exact number is. They're doing very well. Most of their money, most of their cash is sitting in treasuries and rolling over at above 4% rates. That's still pretty good considering their cash balance sheet, just building them, investing cash flow. And in my opinion, I think even the operating sector for the business is doing well. So some people, let's be real, right? Because the way we are on Twitter, we're on social media, we're very in tune with the sentiment in the market, right? But we are kind of narrow vision in terms of who the investor actually is. We have to remember that there are people out there who buy a stock and they literally don't think about it for 3 years. I'm not saying everyone's like that, but I'm saying that a lot of institutions don't trade on a day-to-day basis. A lot of institutions, they buy a very small percentage of their portfolio, but a very small percentage portfolio, like 20 basis points, could be millions and millions of dollars. So they're not so concerned with day-to-day movements as well. But when you think of a $250 billion market cap, buying $1 billion of a stock for a large institution is not a lot, especially when they're thinking on a way longer term scale on a risk-adjusted portfolio for a very small position. They don't care. And that kind of money, I'm not saying that they control the entire float because a lot of Palantir is set on sentiment, but they don't care if the thing cuts in half. unless something really changes.
Look, I'm again, I wasn't talking about the institutions, the people who are serious, have serious money behind them. I'm not talking about them. I was trying to, I started this by talking. We were talking about Grab, and we were talking about it's a $5 stock. So people who don't understand the difference between a market cap and a share price are running up a stock like that because they believe that it can run like Palantir from 7 to 100. So the problem is because we're running out of those opportunities. Like you were saying, it's really tough in this market to find those opportunities. People see $5 stock, people see a lot of enthusiasm. They think this could be the one. And again, it's just because for the last year or two, I mean, dude, Rocket Lab is up like 10x in like a year.
It's well deserved.
Yeah, I think it's
Sure,
rightfully so for Rocket Lab. It was less than $1
sure.
billion valuation.
Yes, I was also along the stock at $4. I know it is, but like, do we just expect another 10x from here this year? Because I think that the people who are jumping in now think that they are going to get another 10x, and that is very dangerous thinking.
I will say I think I was on the spaces with you once. We had a speaker say they can see like Rock Lab being a multi-bagger from here in the near term. Like I hear you on that. Like that's essentially saying, oh, $70 stock in
They
Rock
said
Lab.
near term. They didn't say near term.
They didn't say near term. I assume near term the way he was saying it, that person. But either way, I think those
Look,
characteristics are.
sorry, when you get those questions though of like people saying, "Is this a good buy right now?" What do you think they're thinking? Right? They're retail people. What do you think they're thinking? They're thinking, "How do I
They
double
want to
my
know.
money? How do I make
Well,
5x? How
they,
do I
they
make
want the
10x?"
green light. They want the green light
Yes.
from you. That's all they
And
want.
and
They
and
don't
you
want
know,
anything
Shai,
else.
you're a smart guy, Shai, and you say yourself, like, am I gonna buy Palantir here? No, am I buying this dip? No, you're not buying this dip, right? Because you know where the value is, and you felt that the value was at some other point in time. Look, I'm not saying that you can't look out 10 years. Again, this was a conversation about the stages of the bull market. So we're at a point where we're starting to see higher retail participation. In my view, I'm noticing it on Twitter. People literally are trolling me in my comments because I have 25% performance year to date. They're saying I'm at 50%. What are you doing? And it's like, I'm telling you, it's February. It's not even the end of February, and people have the attitude that 22, 25% within 2 months is not incredible performance. They're thinking, what? That's not a big deal. It's like, okay, dude, you have not been through a cycle clearly, because if somebody is doing over 20% returns for the year, it's insane. So I think we're kind of getting back. So I know you're saying, Sam, it's not like 2021, but it kind of is. And there are signals of that. I'm not saying we're trading at price to innovation multiples. I'm not saying that. That was a zero interest rate phenomenon. Money's slushing around. I'm not talking about that, but it still is closer to late cycle than it is early cycle. That's just my view.
Well, when you say late cycle, do you mean like the complete end of the bull market, or you mean that a possible bear market coming up where it kind of resets a bull market? Because when you
Yeah.
say end of cycle, I literally think like it's the end of this super cycle that Ray Dalio says all the time, and we're in for like a 3-year, 4-year period of hurt.
Oh, I'm not that smart, but I would think that if 2021 was followed up by a 25% drawdown in the S&P over a 10-month period, that's not that big a deal, and that was insane level of peak euphoria and valuations. So, no, I'm not calling for the meltdown of markets indefinitely for 5 years. I'm not saying that, but I do think we are frothy, and I do think, like you said, there are fewer opportunities now. So when there is less value, at some point, when do these people who have held Palantir since $30 ring the register?
Well,
Yep.
so I think this is a great conversation as well, because there's always opportunities out there. Like, logical, like, well, because you find those opportunities consistently because you're a combination of a catalyst trader and like opportunity
Bada
like
bing, bada
cost.
boom.
Yeah, you in and out when you see the opportunity. Those moves that we're talking about, the Palantirs, the Rocket Labs, even IonQ, um, those occur because the stock went through a re-rating. AppLovin as well, a re-rating. Rock Lab at being priced at $5, the business was the same as it was right now at $25. It just was. But the
Yep.
market viewed them in a lens as a SPAC space satellite company Now they see them as a space logistics company in the future, and that's why they're holding this like 10x really well, because they got re-rated. Same thing in Palantir. Under $10, black box, the government consultants. Same AI product, same operating system. $100, enterprise AI winner, and they're entering the commercial space. They're hitting it. So like these re-ratings occur all the time, and a re-rating occurred today. Unity. Unity was one of those names that was priced for not death, but it wasn't priced for being in the market in a couple years. I think it was being priced as it's poor incredible technology, poor corporate governance that dug itself in such a big hole that it's just going to get acquired. That's the characteristics of a really great M&A candidate. Great technology, poor captain of the ship, AppLovin or Meta is going to acquire them. When clearly there were signs that might not be the case. It took some time to phase out. It took over a year because I think the new CEO started like 9 months ago only, but there's a brand new C-suite on Unity now. There's a new CTO, CFO, CEO. They spent all of 2024 gutting all the money losing arm of their body of Unity, and they spent the whole year getting through that. And that's where you're seeing really wonky headline numbers of what was it? It's like year-over-year decline where I think they were down 40. One segment was down even 47%. Yeah, Unity's Create Solutions was even down 47% year over year. The top line growth was down like significantly as well, but they still beat estimates, and they're still like the revenue came in at 457. Their EBITDA came in at 106. Like they have strong EBITDA margins. They're just phasing out the fat from the previous management that just like really just did an awful job. But if you know their product, you know how applicable it is across multiple industries. Like right now, Unity clearly has a duopoly in the gaming engine space with Unreal, but their application can be used across so many different industrial industries. Like a lot of people don't realize it's not deep. DeepMind was built on Unity, Google's machine learning platform. The latest Avatar movie that was filmed using Unity's tech, and you're also seeing under the hood their their industry focused solution surged 50% year over year. That's essentially proof that their Unity is focusing on an industrial angle of their technology, which is what I wanted them to do for years. New management sees that and is implementing it right now. So they're attacking verticals like automotive, retail, manufacturing, and you're seeing this industry focused solution going up 50% year over year. That not only diversifies the revenue streams, it introduces like longer term, high retention enterprise customers that are going to provide more steadier and more predictable growth over time, because the gaming industry is very unpredictable. Developers, it's a hard industry to have that sticky recurring revenue nature to it, but you're seeing Unity go away from that. And not just that, their ad side of the business has been an absolute mess. They try to acquire their way into that space, into their ecosystem through ironSource. Huge mistake. It's been an absolute dud. Now they're migrating towards Unity Vector. That is what's going to be the game changer on the ad side of their business. It's going to be their AI-driven advertising platform that is going to hopefully provide a paradigm shift into their ad business that's been a thorn in their Unity side for a long time. And you're seeing it firsthand where their current app is such a structural disadvantage with what AppLovin offers that Unity's been down 60% the past year. I really do think it's because the ad business has just been a dud, where AppLovin's up at 10x. Now this Unity Vector is going to flip that script upside down, and it's going to kick off in Q1. Management said that on the conference call, and it's going to be fully implemented in Q2 of 2025. So I do believe that this is going to be an inflection year in Unity stock, where you're seeing their tech getting de-risked a bit outside gaming across industrial space. You're seeing them start to eat into AppLovin's bread and butter of the ad space. And you're doing it at a time when the market just it has so much FUD priced into the stock that a good print, like this was just a good print. Like that was a really weak guide. And that weak guide had none of these factors, like the Unity vector kicking off of this quarter. None of that revenue recognition was factored into that guide. So it's clearly sandbagged. But a lot of FUD was priced in the stock. And you could have had 6 months to acquire this name in the teens. Like you really could have. It was just basing for a while as you were seeing the management just clean house and right the ship in order to be at a place where they can actually do these corporate strategic moves like Unity Vector, like the industrial focus applications. So they're at a good place now that it's going to start bearing fruit, and especially in the second half of this year where the year-over-year comps are going to be a lot easier and you're going to start seeing them return to a ton of growth. And now they're leaner, they're seeing their margin expansion opportunity. And this is all not even talking about the AR VR angle. Like you never know when that thematic's going to kick off. So I think the re-rating, Unity's up 30% today. Market was bleeding today. Even at the bottom, like the worst, where CrowdStrike was down 7%, Palantir 10%, HIMS was like down 11%. Unity was up 18%. It showed a ton of relative strength. The re-rating is occurring, and I think it's going to continue. And they're going to have to back it up clearly with the next print, but I'm like the technology's there and the management is showing signs they're competent enough to know what their target market is and how applicable their tech is, that I'm starting to have real faith in them. So, and that's also, I won't get into too much right now, but like the democratization of AI, what DeepSeek's playbook review is, it's a game changer for gaming development as well. Like when Unity infuses an LLM into their ecosystem, the game development cycle is going to rapidly get lower and lower, and that time window is going to be tighter and tighter, and there's going to be a lot more games that are going to be developed because of that. And when you have a duopoly in a gaming engine like Unity does, the thematic's going to carry you. So like there's just so many tailwinds working for this company that really, I just need a competent enough management to handle the tech efficiently. And we have that, it looks like. So that re-rating of like Rocket Lab from 4 to 25, Palantir from 10 to 100, IonQ from 7 to 50, Unity from 15 to 100, like I actually can see a pathway for that if they continue this momentum. I don't know. Have you guys looked into Unity at all?
I mean, it's $100, $100 this year.
App Lovin' 10x. First
It's
off,
a
fundamentals,
way different story.
fundamentals have to back it up. But let's just say Unity is supposed to be growing only 2% this year. 2%. If they grow in the teens, let's just say they grow in the teens, which is a chance if the vector actually gains momentum and starts actually picking up, because right now their ad business is just garbage. If that picks up momentum and they grown just in 14%, I think the stock now qualifies for the Rule 40 score potentially.
Well, I didn't look. Okay, I'm sorry. It's just when you're talking about a 4 times from here. All right. So
I'm not saying this year. I'm saying
I thought you were saying it's gonna happen this year. I'm like,
oh no.
What? I'm looking at these metrics like no way.
No,
like,
I see a guide
profitable.
path towards $100, like eventually. But like,
I mean, yeah, if that's a thesis, that's a different story.
Yeah, totally. And but this is like one of those few opportunities out there where everything's like CrowdStrike pulling back 7%. It was still above $400. Like it was all those names out there where they have moats or duopoly or monopoly. They're priced accordingly. There's like rare fire sales out there with a pure duopoly or monopoly.
Sorry, I got to butt in real quick just because some of these numbers don't make a lot of sense to me. You clearly have a lot of conviction in the name.
I know.
Like,
look at them too. I'm like, no way.
look, I just think it's tough because, you compare it to like an App Lovin', it's just not, because the number is wise. Because when I was looking at App Lovin' at $80, it was trading at 20 times free cash flows, growing 40% on the top line.
App Lovin' is a $160 billion company. Unity's $11 billion. It's not fair to compare them. I shouldn't have done that.
Shy just became like me, who's like this value finder in the smaller caps or something.
$8
No, no,
billion
no.
dollars.
Welcome to the garbage, dude.
No, time out. Let's reverse.
You're looking
I
at the
am
gutter. It's like, what's up, man?
No.
Come on in.
But you're all
I
you,
am-
dude.
I am Mr. Moats. You guys know that. I love the moats.
I know.
They have a moats. It's just they had the worst captain on that ship. I think we're seeing actual competence behind Unity, and they have so many thematics that are going to be massive runways that their tech just speaks for itself. So like I'm just hoping the fundamentals back it up, because that's when you find those 5 extras, the reason for that is because nothing's being priced correctly. AppLovin, these margins that AppLovin is like producing right now, nobody could have dreamed of that 2 years ago. Nobody.
Shy, I gotta ask you, why was this stock up 30% today? Because I don't see it.
Yeah.
I just told you. I just went through like the 10-minute
Well,
explanation.
I
I think
know,
we
but,
basically
like-
said
Okay,
it was
fine.
a Tesla quarter,
The
right?
TLDR of
It was a
it
Tesla quarter.
is you saw real signs of what the management's future vision is for Unity. It's the AI-driven ad platform, which didn't exist before. The Vector is a game changer on the ad side of the business, and you're seeing them make commentary and also show the metrics, 50% year-over-year growth towards the industrial space, automotive, retail. Like that's like they're caring more about that and less about gaming. That's something that's new to the stock characteristic on the management, because previously there's like, oh, AR, VR, gaming, they could care less about profitability. This industrial angle, that's where the stickiness comes into place, where it's large enterprises get in space. And they just announced a partnership with Toyota just 2 weeks ago. And like
So-
Toyota,
Sorry, go on. Sam, were you gonna say something?
I mean, okay, let's say I were to buy Unity today, and this isn't financial advice. I'm just curious of what your take is. Let's say that I was looking to invest in a company for the very long term, right? Like 5-10 years. If you were to buy Unity today and you had $1,000, now you know what, that's actually not. Let's say you had $10,000.
$4,000.
Put in Unity.
4,000.
So you put 40% of your portfolio in Unity.
Oh, they meant 40% of if I want to invest 10,000 in Unity. How much would I do?
If you had $10,000 and you had $10,000 cash,
Oh,
really new to the stock market, and you looked at every single company, right? So if you look
Well, why
at
not
Unity
just ask
today,
him? Why not just ask him for what percent of his portfolio it is?
no, I don't
4%.
want to do that because
It's 4% of my portfolio. Everyone,
There we go.
4%.
oh, yeah,
$400.
I don't want to, you know.
No,
I
it's
don't
so
know, I don't wanna
it's
resubscribe to
4%.
that.
But again, imagine having AppLovin at 4%
We have
2
your
years
small
ago.
cap bucket or your
No, my
portfolio?
growth portfolio.
Okay.
Shy, can I tell you? Here's my hold up with this. I just sold a stock today, or actually yesterday in after hours, and I know it's not as high quality. Definitely not. It's much cheaper though. Vimeo software stock. I don't want to get too deep into that, but I want to draw a comparison here. It is true because these are
It's such a different TAM, though. It's such a different TAM.
It is, but the similarity though is that this is now a turnaround stock. There's new management or whatever. They're headed in a new direction, so you are holding a turnaround. It's just important to be like 100% like agreeing with the fact that it is a turnaround now.
Well, can I
This
ask you?
isn't a
Does-
PayPal. This isn't a
no.
PayPal though.
No, but
Yeah, okay.
that's the thing. Like, does Vimeo have a duopoly in a theme?
They are the largest company in video storage or whatever. So they are actually
Yeah,
like
but
they have the
that
biggest
feels
market
like
share
such a
in-
niche. Like the gaming engine of the whole world, a duopoly of the gaming engine of the
Yeah.
whole world is massive.
Yeah.
They
Again,
figured that
I'm
out
not trying
already.
to. All I'm trying to say is that like it's so tough with a turnaround. Like if, for instance, last quarter on Vimeo, and I'm just trying to give like a comparison of what could possibly happen, and just to be aware of it. I'm super happy that you're excited about this. I actually hope this works amazingly for you. And actually, if I saw another quarter come up here, I wouldn't buy on this quarter because I don't see it in the numbers. But if I saw it on the next quarter, even if the stock was at $40, I would buy. Even if it was up 30% higher, I would buy it then. So that's kind of how I view this situation. You are taking the chance before that happens. I would wait for the confirmation because even though the reward might get lower from there, the risk also goes lower. So for me, the risk reward gets better. For instance, Vimeo, I had one quarter to look at and it looked like, oh, enterprise sales are actually up 40% year over year, blah, 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 whatever. Like the last report was good. This report, revenue is down 2%. Oh, but our enterprise revenue is still up a lot. But guess what? Stock's down 20%. So it's like the market still didn't care, and so it's just a tough situation with these like turnaround situations where like because right now I look at all the stats, it's like we're down 11%, we're down 17% year over year on this segment. So it's going to take a while to lap those things until you head back towards like growth. Like the comps need to lap is what I'm trying to say. Otherwise, like it's still going to show up as negative if that new segment isn't able to grow fast enough to make the overall revenue growth look good. You know what I'm saying?
No, I hear you on that. What?
You've been using it for a while. Like it's not a new position for you.
No, it's not.
For me, I had 200 shares in the 30s, and I got really aggressive with it. Obviously, in the past 6 months, I have 700 shares now in it. So my cost is like $19. But I will say, a lot of these disruptive early secular growth themes. I know, like Logical, you're gonna hate this. There's just certain things you can't see in the numbers. You can't see it until it happens.
No, that's completely true. I agree with that. That's
so
why
that's what.
Yeah.
You have to like really know the company inside and out, the conviction. Like I clearly have the convictions. Like the numbers are meaningless. I look for 2 small things and I got those things. Yeah.
Shai, you're right. And what did we have a convo about last time on this show? I talked about how conviction is overrated. And you said,
this is a perfect example. Perfect example for this. This is the perfect case study.
This is it. Yeah, exactly. Like you're like, no, like I know this company, they're headed in the right direction. I feel like every time I put myself in that situation, I get a Vimeo situation. Stock's down on me.
Vimeo's
I exit at a loss.
Different. I mean, I'm shocked they said they're a leader in that.
Yeah, they're quite different. I mean, when it comes to gaming, if you're a developer for a gaming, you're either doing Unreal or you're doing
my
one or the other. And Apple is already using Unity as well for its Vision Pro.
My sister, not that she knows much about stocks, like specifics, but like she's a graphic designer, and she told me like Unity for sure is a stock you want to own. Like she told me that like 4 years ago or something like that. Obviously, she would have been a horrible investor, but
no, that's the thing. Like
the long term,
incredible tech.
Right.
Anyone who told you to invest in anything 4 years ago was bad advice. Like it's anyone who did.
Okay, I will say though, like. Even this turnaround, it's an absolute awful turnaround. Like I'm looking at Vimeo's margins; they're still 8%. Where Unity's 20-something percent. EBITDA.
Wait,
just
on the
EBITDA.
Line?
No, EBITDA.
I mean, dude,
is
honestly,
it adjusted or is it?
I mean, they trade it like less than 2 times EV to sales, though. It's extremely cheap.
Wait, but
I'm not on the stock anymore. We don't need to get to.
I think it is adjusted, but also like. Unity is trading at 4 times only. 3.5 times before today.
Oh, sales. Yeah, that's fair.
They're growing at 2%.
Yeah,
no,
exactly.
It's a restructuring. It's a restructure. I hear you.
Can I, sorry, real quick, because we're on the topic of like software companies, because we're so big on software, and we should jump into earnings preview at some point before we end this show today.
Yeah.
But
Sure,
today, the biggest winner I've had so far in this earnings season. And I almost got shaken out of the position when I read the numbers, but I didn't, thankfully. And I looked at it. Amplitude, which is a very cheap software stock, ticker AMPL. I've been in that name. I use the product every single day for the last like several years, my last 2 companies. So I knew the product. I knew the stock was extremely cheap. It was trading at like 3 times enterprise value to ARR, which is really cheap in that area. And they basically showed re-acceleration on the top line. When you like, so this is what I will say. Like when you have a stock like Unity, if it is able to show any sort of re-acceleration on the top line, it will be up a lot. And so I don't see that necessarily today in the numbers. So I don't know why it's up 30%, but maybe the market's looking through and seeing what you're seeing. No, but exactly. Market's looking. No, but I'm saying like Amplitude, for example, you're seeing it at the top line numbers. You're seeing it at like, you know what I mean? Like it's not like in the specific segments. It's like, yeah.
Can I ask you? All right, so the estimates, like, ignore the future and what the like the revenue year over year. Estimates on the top line for Unity was 433. They came in at 457. That's close to a 6% beat. EBITDA, same thing. I mean, not EBITDA. Free cash flow, 68 million. They came in at 106 million. That's almost like double. It's like they're sandbagging guidance.
Wait a minute. That's cash flow.
Free cash flow, yeah.
But okay, so free cash flow, does that include interest income? Because they have $2 billion of cash, dude. It's a good point.
I fine. Okay,
Yeah.
let's fine. Let's go on EBITDA. EBITDA then. Let's just do EBITDA. EBITDA
Yeah.
was 85 million estimates. They came out at 106. So that's a 20 something percent beat. It's
Yeah,
like
it's really
no
good.
30% beat. It's like
Yeah, that's really good. That's really good. Okay, I'll give it to you. All right,
so
fine.
like
Yeah, it's still 40 times EBITDA or whatever.
buy my stocks, Logical. Buy them. Do it tomorrow.
You know what though?
It's an interesting story.
I'm grilling you because I actually do want to be a believer of this. Like I'm actually like trying to poke at this thing because I want to understand it. Like I'm not doing it out of like I'm hating.
Oh,
I
of
actually
course
want to
not. Of
know.
course not.
Yeah,
Yeah,
I want to know like because I actually do think it's an interesting company. I think the gaming engine makes a ton of sense. I think the ad angle makes a ton of sense. I would love to own it. I need to, you know me. I'm like very valuation oriented and like stuff like that.
Listen,
And so
I'm the only Unity bull out there. You guys should take advantage of this moment.
Well,
and
not
ask me the
anymore.
let me right.
Not anymore.
Okay, yeah, this is proof. I was the only one. If there's more that's going to come next, like this the rest of the year, episode 6, Stock Savvy Shy. I was the only Unity bull.
I like
know
this.
that.
This is good, man.
Okay.
I like it.
Okay.
All right. So let's do earnings
Never
preview
seen-
because next week is going to be nuts.
There's nothing next week. There's
I'm
nothing
very
important.
concerned. I'm very concerned.
All right. So we have we start off hot on Monday because we have some healthcare names that are catching a bid in 2025. We got Hims and Tempest AI reporting after the bell on Monday. That's going to be a big one. We got the dinosaur stock of Zoom also reporting on Monday. I don't know how they're public still. What a commodity. There's no edge in their name. I'm not holding back. It's a shitco. Shitco on investment case. Tuesday morning.
Wait, you missed Navitas.
Navitas is not going to do well. China exposure, EV.
I thought you were a fan. I
am a fan. I own it. 4% of my small cap, but like this Indy and Air Test Systems, the EV industry is struggling still. There is no turnaround right now. And the China exposure, who knows with Navitas. Tuesday morning, we got DigitalOcean, my favorite pure play computing name. This was one of my turnarounds. I picked 3 turnaround stocks: Snowflake, Unity, and DigitalOcean entering the year. So far, we got a little 2 for 3 right. So let's hope DigitalOcean backs it up. After the bell on Tuesday, we got Kava. They're being priced as the next Chipotle. Let's see if they can back it up with earnings. We got Axon Technology. I did not know they reported Tuesday afternoon. Well, that's going to be a huge one because they have one of the best monopolies out there for under a $40 billion market cap company. But they have some
down so much
competitive headwinds. We can get into that next week. That's a great topic to get into next week because
I was looking into that lately.
Their partner, Fluke, I'm blanking on the name right now.
It's a good percentage of the revenue, and they lost them. It's like $3 billion revenue, right?
It's not 3. It's
they're a $3 billion company, but they like
it was a feature into their ecosystem, and now that little feature is becoming more of a competitor. So now they have to cut bait because they're taking advantage of Axon's ecosystem. Again, it's like imagine I have this like I'm not gonna say Cheesecake Factory, some like high Mastro's. I'm Mastro's. One of my vendors thinks they're getting a little too cocky. They can replicate my product. They create this mom and pop shop. Mastro's gonna be just fine. That's exactly what's happening with Flock and Axon. So I'm not worried, but I'm interested to hear the commentary. One of the best management companies out there is at Axon. Yeah. We got First Solar Tuesday after the bell as well. We got Lemonade, which is catching a huge bid recently.
Yep.
We got Coupang. I'm shocked that Sam, you're not into Coupang more.
No, Coupang. It's just they're more in South Korea, and I haven't done enough research. I know Stanley Druckenmiller is a big fan of them, so
I was long that stock. I was long that stock for like a year and a half. Actually, I really like Coupang. I was long from 13 to like 25, and then I exited. It dipped recently, but man, if you look at that chart, it perked right back up. It almost makes me want to re-enter it because it just looks so damn good. And maybe that far-fetched acquisition they do is going to start showing dividends because I think that's been a big drag on the stock and like questionable management. Did they do good capital allocation? That could be an interesting one to talk about next time, but no position for now. But it's an amazing company. And in terms of automation and logistics, they are so far above. I think people just look at it as an issue of TAM because it's South Korea is pretty small,
I mean, it's fair though. Okay, so that's an interesting one. Then we also got, I'm looking, We got
Workday.
Procept reporting next week. We're still
Oh.
on Tuesday.
Procept
Procept Biorobotics
Biorobotics?
after
that's
the bell on
okay.
Tuesday. That's
I'll
dude, if we
put
get
that one on my list.
if we get like a 20% dip on that, I will love this name under $50. That would
I
be
saw me
awesome.
too. I was long that one from 47 to 90 or something. I sold it. Turned out to be good. I saw a short report come out on it. So back on my watch list. Let's see. Yeah, I
Dude,
saw a short
You guys
report
need
on
to
it.
talk about this. You guys keep on talking about this one, and I never.
Well, it's
it's
because I
very
was long.
intuitive surgical. Like I'm telling you, like the
Well,
robotics angle.
I was long Shockwave Medical up until J&J acquired them. So like I'm very big into medical devices. So that's just a sick one. Dude, I have so many earnings next week. It's
I was
kind
gonna
of
say
ridiculous.
you have ARC 2 as well. Are you still in ARC T? I mean, or Arcutis
Yes, I
Biotherapeutics?
am. And that's been a nice one, honestly. So ARQT, they have like a product commercially approved for psoriasis, and like it's like a cream for like it's like the best in the industry. They just partnered with OBJ. I don't know. They're just doing all sorts of stuff, but the stock is really cheap. They're growing like 50% quarter over quarter. Stock should be way higher than it is today. Let's see what happens.
So we also last name on Tuesday is Ginkgo Bioworks, ticker DNA. This is one of those names I know we talked about in our group chat. This could be like a 50xer or it could be zero. Like I'm telling you, like this is no, I'm
a
not
lot.
kidding.
It's
It
French
could
play.
change the
French play.
world. It
Yeah.
could change the world, or it's a dud. Like there's really not much.
I've seen good things on the dud side, which makes me a little cautious on it. Like
It's
some
worth
really
a spec play. It's worth a spec play.
and I've heard
You
other
never
people
know.
on the other side. Yeah, so it's tough.
All right, so Wednesday. Let's move on to
Don't forget
Wednesday.
Workday. I kept saying Workday's reporting Tuesday after.
Oh, that's what you're saying. Workday.
Yeah. Workday.
Oh, I missed that W. Yeah.
I know you guys don't give a hoot about that one, but
No, I don't.
Dude,
on,
licensing models, CPS models are dead. They have
I
to
think
figure out
Workday's
something.
gonna be a new all-time high soon. So that's just my.
I mean, they're
I
still
know.
dominant.
Sam is good with this stuff. I'll trust him on
Yeah.
that one.
It's cloud. Like, I mean, how can I like this?
So
This is my specialty.
bi-weekly calls. Understood. Okay.
No, I'm not gonna.
Okay,
No
dude.
way.
I'm
Super
messing with you.
small position.
Wow,
Yeah.
so there's not much Wednesday pre-market. Clear Secure. I don't know if any of us are into that
Well,
one.
actually, Home Depot and Lowe's are reporting on Tuesday and Wednesday. I think that might tell a lot for the housing market. I think that's
Okay,
pretty important
boomer.
in the macro front. And then, dude, were we not just talking about Walmart?
He's the
We were
only
talking about
homeowner
Walmart.
among us.
Yeah.
That's why he cares.
Boomer.
It's really important for him.
No, trust me. When it comes to the housing market, if Home Depot has a terrible guide, the market will react to that. It's like Walmart.
Oh, brother.
So I'm happy. I'm happy. Wednesday morning is pretty dead because Wednesday afternoon, guys, you gotta sit down in a quiet
Nothing's
room.
happened Wednesday afternoon.
We got Nvidia, we got Salesforce, we got Snowflake, we got IonQ. What did I do to the earnings gods to make me deserve that afternoon?
Storage.
I have Magnite that day as well, which is a huge position for me.
Magnite is
And
that
I'm
day.
scared about that one, man, because of what's been going on. I'm not feeling that great. I don't know. We'll see. I also have ClearPoint Neuro, but I think they're okay. CLPT, that's a great small cap biotech company. I mean, they've been killing it. It's like up 200% in the last year. It's crazy.
Nutanix is reporting.
I don't know what that one is.
Nutanix, they're mostly to do with like data centers. They build technology that is surrounded around that.
It's a hybrid. It's like a hybrid.
Yeah.
I mean, it's got a place in the ecosystem. Like it really does. I cut them way too soon a couple years ago. That's essentially Wednesday's Nvidia, and of course,
Wednesday is
Snowflake.
crazy.
Yeah, it's just nuts. Thursday pre-market. Do we have much? I think people are hungover from the Wednesday afternoon. So there's not much.
All those Nvidia earnings parties.
Yeah, let's see. Thursday after about we got Dell. We got Rock Lab. Oh my TMDX. Jeez.
Yeah. That's a big day for you, man.
Yeah, that's a big 24 hours. Like Wednesday afternoon, Thursday afternoon, I'm gonna be a mess a bit. We got
Archer,
Elastic,
SMR.
Yeah, Archer.
Yeah.
Autodesk.
I have 3 on that day actually that you have not named. I have Rocket Companies. I have PSNL Personalis, which is that baby TEM. And another one is Compass Pathways, which doesn't matter too much. It's a psychedelic clinical stage biotech name. We'll see. Phase 3, but I don't think earnings matter as much for some of those pure bios at all. But I think Rocket will be interesting.
I said we have D local as well. We got a couple real estate stocks for you, Sam, Redfin, and Open Door.
Oh, I'm out of that one. I cut my ties to that one. That was a spec play.
No, I was just interested if you want to see what the housing market's like, you boomer.
That's
Yeah,
not a freaking housing market stock. That's a software company, dude. Get out of here.
We also got one of my favorite plays out there Friday morning. That's weird. The reporting that are
Fubo?
Fubo. This is gonna be a game changer. Oh my god, it's probably one of the worst shitco's out there. I have no idea how they're still out there. Like,
Did
it's
they have like
crazy.
negative gross margins or something?
It's like
Is
everyone
the-
I know, they sign up for a free month and they cancel
Yeah.
after the free month.
I've done that. It's crazy. I needed to watch like the World Cup or
Disney
something.
announced they're acquiring 70% of the company. So I don't even know if the
Oh,
quarter
yeah.
anything's going to happen that quarter. To be honest, like even if they whatever they report, I think it's just not going to matter
That's fair.
Why would Disney want that? Like, there's no. It's just
Like,
because
gotta
they want to
pretend
compete
it's
against
dollars.
Amazon.
All right. Anyway, we just went way over on this one, but again,
Yeah.
this is a great episode, 6th episode. Lucky number 7 is gonna be next week. I'm either gonna be happy or I'm probably gonna be pretty
horrible.
sad. It's gonna be
really
crazy.
bad.
I honestly
it's gonna
should have
be
taken.
you.
I should have taken PTO next week. I should just I need to be calm. I need to be cautious. I'm gonna
Okay,
tell my
Batman.
fiance. I'm gonna tell my fiance this is my earnings period. So you have to emphasis on the period. Like when she's like, I'm PMSing for my earnings. This is my earnings PMS. So I'm telling her, I'm gonna warn her. I'm gonna be very dramatic, up and down. I'm gonna be very needy. So anyway, hopefully you guys all have your partners that you can leverage for moments like that.
My wife doesn't care about any of this, so she doesn't care.
I mean, when you have kids, I feel like that's the priority. For me, it's just
No, before she had kids, she never cared about any of the stocks. It didn't even matter to her.
I will say, my fiance is starting to get nicer and nicer gifts. And I think she's now seeing how important the stock market is. I think that's probably why she's so invested in it. But yeah, any signing off words, guys?
No, let's just hopefully we survive till next week. It'll be a fun one. I mean, there's a lot of excitement right now around earnings, and we'll see what happens.
Yeah, just want to give a shout out again to our sponsor, Osprey Funds. Go ahead, check them out, ospreyfunds.io, OSPREYFUNDS.io. Check out the prospectus, more details, and again, not financial advice, guys. Take care.